Hello everyone, my name is Denis, and in this video we will talk about Boston Scientific Corporation, and I think I will publish a video only if I see some sort of an upside in stocks. That is why I think you should definitely subscribe. First of all, here you can see a model, and actually it is a average numbers, price to sales 6, then we have 10, it is a gross profit, and net income or price to earnings 40. It is a little bit high numbers for a company that traded with 10% growth rate and 20% net income, but it is some sort of average numbers for this specific stock. That is why I think probably we will see some good profits here. Second of all, that if you see something like this, where you see really nice revenue growth rate and net income actually are better and better in the years, and actually you can see it because net income previously was like 5 to 10%. In 2023 it was 11%, then 11 again, and 14 in 2025. I think that it is possible to see something like this, and it will be awesome from my point of view, and it is possible. It is quite old presentation, but to understand this stock a little bit better, I think it is crucial to check it. If you don't want to see this presentation, you can skip it, but definitely if you're buying something, you have to understand how they will grow in the future, and it is definitely interesting from my point of view to buy BSX. Here you can see some numbers like cardiology. It is like 50% of the market, and the United States like 65%. Here you can see a guidance for 2025, and I think they lowered it a little bit in the first quarter, but anyway, we will see the same numbers. Here you can see that the organic revenue growing faster than in 2015 to 2023, because they are targeted it in their portfolio. Here you can see that 60% related to high growth markets, and I think it is awesome. Here you can see how it looks like previously, like 50% was with a not really high compound annual growth rate. And the second thing that I really like, that they are focusing on free cash flow on a long range, around 70 to 80%, and it is definitely awesome. Definitely for a healthcare related company, you need a lot of money for research and development, and here you can see how they will do it. They want to spend like 10% for R&D, and it is definitely quite nice. 65 clinical trials, 40% M&A deals executed over last decade, and they are using venture capital to grow better in the future. Cardiovascular, MedSearch, I think I will just show it to you, but without any comments, because we have to spend unreal amount of time to actually research it on a high level. Here you can see a pipeline, and you can see this like existing market blue one, then some sort of green and purple, and purple will added in 2028. Maybe I wouldn't hold to 2028. I really focused on maybe 1 year profit. But anyway, if we're buying something like this, you definitely need to understand how they will grow in the future, and I think it is no-brainer that they actually can do it. Organic revenue compound annual growth rate 10% plus. Everything is absolutely awesome. Here you can see that 35% of 2025 BSX revenue is HSID growth markets. Europe, Asia, Latin America, plus they have specific things for China, mid-10 CAGR up to 2028. And it is awesome because we have a lot of China people. Traditional market grow not really fast. You can see 7%. But anyway, it is money and they have really a good margin. And I think I will pass other slides because only specific things that you need, it is K products. You can see them here. Nothing interesting. K products for the portfolio. Again, here some surgical stuff, endoscopy. Expect to outpace majority of our markets over LRP. Again, a lot of products, more products for vascular market. More products, and I think it is awesome that we can participate in this market. Body Guardian Ultra Life for diagnostics. And I think the main slide from this presentation, it is financial goals. Here you can see 14 to 15% revenue growth. It is awesome. 75% free cash flow, and quite the same numbers for 2026 to 2028 with 10% compound annual growth rate and 70 to 80% free cash flow. That is why I think it is definitely an interesting company to research, and you have to do it by yourself before you will buy it. And here you can see some news from April 22, 2026, and I really like that they lowered their guidance a little bit, because that is why we can buy the stock on a lows. But really, I don't actually understand why it is so cheap right now. Here you can see some sort of diversification, endoscopy, urology, neuromodulation, and cardiovascular. Plus, you can call this niche like a med search. Here you can see how it looks like from a region. United States $3.2 billion, EMA $932 million, APAC 800, and actually it is quite good because I think not United States revenue will grow. And here you can see guidance for full year and second quarter 2026. The company now estimates net sales growth for the full year 2026 versus the prior year period to be approximately 7 to 8.5% on a reported basis. 7 to 8.5. From my point of view, I think that they can reach 10%. Because first quarter was actually good, and this sentence quite awesome. The company now estimated adjusted EPS excluding certain charges, credits of 3.34 to 3.41. I understand that it is adjusted EPS and it cleaned from like one-time things, but anyway, it is awesome. If we will just multiply 3.4 to 1.49 billion shares, we will get close to $5 billion in net income, and it is definitely awesome. Because in 2025 it was just 2.9, and they will jump from 2.9 to somewhere like 5 billion, and I don't know how it will relate to share price, but definitely it will be super hard to fall more. I think like a super strong bottom will be like on $46, but I'm actually buying it right now. Plus, I'm buying some call options. And I think we can check this stock on Guru Focus. Here, how it looks on the Guru Focus, you can see that EPS not 3.4 here. It is GAAP EPS, maybe that is why we can see this number, but if it will be like 3.4, it is definitely a good sign, because we are jumping from 2026 to 2028 in 1 year, and I think it is like super strong. Other metrics quite normal, net margin 17. They have some debt, but it is not huge, like interest coverage 11, and they have some sort of a stable income. And you can see that actually total stockholders equity growing from 15, 16, 17, 19, 21, 24 billion dollars, and it is absolutely okay, and really small dilution, like 2 to 0.5% per year. What do you think about Boston Scientific Corporation? Please write down your thoughts in the comment section below. And if you like this video, come to my streams on Saturday, 11 Eastern Time. See you later. Bye bye.